The Asian Development Bank's bond monitor, meantime, is set to be released tomorrow, September 1, with more and more investors turning to bonds. But, of course, people have a lot of variance in terms of which end of the spectrum they're in, whether it's corporates, whether it's high yield, whether it's sovereign. It is one area we do not overlook. Joining us is Iwan, Azis, Head of Regional Economic Integration at the ADB, all the way here from Manila, right?
Yep.
Good to have you on the show with us. Welcome, sir.
Thanks for having me.
What are the trends? I mean, this is a 6-month sort of a snapshot, sort of a viewpoint of what's been going on. We don't need to talk at length about what's been going on in the U.S., the compression of yields, what's going on in Europe. But what about the Asian environment right now for the credit markets?
Given what's happening in the world economy, including the S&P downgrading decision, Asian bonds market is doing very well, and especially the corporate sectors, because as you know, most of the bonds market in Asia are still dominated by government bonds. But if you look at the growth rate in the last, I would say 12 months, the corporate bonds is doing very, very well, double-digit growth.
Are we seeing a more deepening of the bond markets? Because that's the often, repeated criticism, is that the bond markets in Asia tend to be sort of a mile wide, but an inch or two deep. You know, we don't have long-dated maturities, and that leads to a lot of, that leads to a lot of maturity mismatch, which is why we have such short-term itis. For instance, reloads on mortgage rates on a 30-day rolling basis. We got to get away from that if we're going to do any longer-term planning.
You're absolutely right. But again, if you look at the last couple of months trend, it's really doing very well. For example, countries like Indonesia and the Philippines, if you look at the maturity of their bonds, it's moving towards between 5 and 10. It used to be 1 to 3, but now it's 5 to 10. And in the case of Indonesia, it's 40% of their bond are really 10 years bond. So, if you put in the perspective of, excess liquidity in Asia that has to stay in Asia rather than invested in this Europe and then reinvested in Asia, this is really good, because most of the capital inflows, if they are not able to convert it into long-term investment, that creates problems.
Where's the real action right now? I mean, the news is dominated by dim sum bonds because it's all the rage right now because of the rapid emergence of China. But what about what about local currency versus U.S. dollar? There was a time when greenback denominated debt was really the only place that most people would touch. But with the problems the U.S. is having, this elongated sort of malaise that the economy is going through, are we seeing a resurgence in the popularity of local currency debt?
Actually, it's broad-based, because if you look at the local currency bond, the number of the foreign buyers is really increasing significantly. Just to give you one extreme example, in the case of Indonesia, it's almost 40% of the local currency bond are owned by the foreigners. And in terms of the G3 currencies bond, it's also increasing. So it's really broad-based kind of a trend.